Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at Coinbase stock. First off, I want to apologize for posting the wrong earnings dates in the last video. I got the earnings date on TradingView, which was obviously incorrect. I should have just taken the extra minute to double check the earnings date on the official Coinbase Investor Relations website. So apologies. Coinbase did report earnings this week. Coinbase did have an earnings beat. The biggest thing I took away from Coinbase earnings was the earnings loss of $2 million. Now, I know that sounds really pathetic, but this is the closest Coinbase has come to posting a positive quarter since the last bull market back in 2021. So Coinbase is trending in the correct direction in narrowing their losses quarter over quarter. Now, obviously, I urge you to watch the previous video where I discussed the influence of the financial media. The financial media is bearish on Coinbase stock because of transactional volume. Now, Q3 retail trading volume this quarter crashed 50% from Q3 of 2022. So why has retail transactional volume decreased? Well, we've been saying this for a few weeks now. Retail investors are ill-positioned in crypto, and the Coinbase earnings reflect that. Most retail investors are sitting on the sideline, believing we are on the verge of a substantial bear market. Now, if you've been following this channel for a few weeks now, we've been saying that Bitcoin and other cryptocurrencies are on the verge of a substantial bull market. Just go back to previous Bitcoin episodes if you want to find out why. Now, most people are just sitting on the sidelines, putting their money into money market securities, generating them a guaranteed return of 5%. Most people are just not interested in crypto right now. What I can tell you is that retail interest will start rising when Bitcoin pumps above $40,000 to $50,000. That's just the way human psychology works. People aren't interested in cryptocurrency in a quote unquote bear market. Only when fat, bullish candles come into crypto, retail interest starts to rise. And if retail interest starts to rise, more and more retail investors will start buying cryptocurrencies again, leading to increased transactional volume. In other words, what I'm saying is I'm not as worried as the financial media is concerning Coinbase's transactional volume. So moving into the technical analysis, just a quick overview. Coinbase stock is trading in Wycoff accumulation schematic number 2. We're either in phase C or phase D, trying to form a second LPS, which stands for last point of supply. So for the first time since we've been on YouTube, Coinbase stock is finally about to get a weekly closure above our automatic rally resistance level at $83.32. Additionally, on the 2-week time frame, we have a bullish engulfing candle right out of our blue Fibonacci retracement support area that spans between $56.32 to $72.89. So this bullish engulfing candle just increases the probability of a breakout towards the upside. Now, Coinbase isn't completely in the clear just yet. Even if Coinbase stock flips the automatic rally resistance level at $83.32 from resistance into support, we have one last hurdle, and that's going to be the resistance level at $116.30. You know, as stated in previous Coinbase episodes, market makers were going to play mental gymnastics with retail investors, and they got me last week. Last week, I sounded very negative about Coinbase's short-term price action. Obviously, it doesn't take Sherlock Holmes to realize that a lot of my portfolio is concentrated in Bitcoin, Ethereum, and Coinbase. And this is why I explained in yesterday's video, I'm not a short-term trader. I'm not good at short-term trading, and I don't endorse short-term trading. I'm just accumulating for the eventual bull market breakout. Now, I'm going to turn on the Fibonacci rings. As discussed in previous videos, as Coinbase stock is approaching the Fibonacci ring, volatility would increase. And that is apparently becoming more evident as Coinbase stock dropped 20% last week and is up 25% this week. Coinbase stock is starting to trade like a freaking penny stock. As stated before, Fibonacci rings don't dictate the direction of where a stock goes. Fibonacci rings just indicate that volatility is on the horizon. So definitely keep expecting more and more volatility as Coinbase gets closer to crossing this Fibonacci ring. Finishing this video off with the Coinbase against Bitcoin valuation. As explained a few minutes ago, the mental gymnastics got to me last week when I saw two large bearish momentum candles closing below our blue Fibonacci retracement support area. I got short-term bearish on this chart. It's crazy how 1 week's worth of price action can change perspectives in the short term. So this week we do have a bullish reversal pattern happening on the weekly time frame, which is known as the tweezer bottom pattern. Additionally, the Coinbase against Bitcoin valuation has now reclaimed our blue Fibonacci retracement support area and the one-to-one trend-based fib extension. Over the next few weeks, I'd like to see the Coinbase against Bitcoin valuation start closing above the 50 weekly moving average in orange. If we can reclaim the 50 weekly moving average, I'll start believing that the next wave up on the Coinbase against Bitcoin valuation is finally here. If the bottom did occur last week, this is starting to resemble a 333 WXY pattern. In other words, we came up in 3 waves. We came down in 3 waves. And that we're about to complete our WXY pattern in 3 waves. Now, a common target for a WXY correction is either the 1-to-1 trend-based fib extension or the 1-to-1.618 trend-based fib extension. Both imply that Coinbase stock is going to freaking rip it towards the upside. So if you own Coinbase shares, get ready for some more fun and volatility. Hopefully this is the true breakout. Okay, so that's my analysis on Coinbase stock for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one.